Good morning. It's Tuesday, the 28th of January, and this is Govindraj Ethiraj, headquartered in broadcasting and streaming as always from a warmer Mumbai, India's financial capital. The take. Poor Donald Trump. Barely a week ago, he and his tech bro pals appeared to be on top of the world and in full control of it. They were riding on the back of trillions of dollars of wealth, riding in turn on top of trillions of dollars of market capitalization gain in businesses ranging from e-commerce and search to social networks and electric cars. If there was any problem that raised its head, it could be swatted down with a threat of tariffs or a stern gaze, as Trump did with a flourish with Colombia and brought the Latin American nation back in line to take back illegal immigrants. And now comes DeepSeek, a free open source large language model launched in late December, apparently developed in just 2 months for less than $6 million, much lower than what it took for OpenAI in the United States. Last week, DeepSeek released a reasoning model that also reportedly outperformed OpenAI's latest in many third-party tests. The result, stock prices of almost all tech majors started spiraling downwards on Monday, including AI chip giant NVIDIA. Losses were expected to cross more than $1 trillion in value. So why are these stocks crashing? One, because the developments have raised questions about the amount of money big tech companies have been investing in AI models and data centers. Srini Pajuri, a semiconductor analyst at Raymond James, said in a note on Monday reported by CNBC that DeepSeek clearly doesn't have access to as much compute as US hyperscalers and somehow managed to develop a model that appears highly competitive. As other analysts have pointed out, this raises questions about the entire AI supply chain, not just the software, but the hardware that powers it, the software as well. Fortune columnist Nicholas Gordon wrote last week that on one side, the United States and its new Stargate project, a massive $500 billion pledge with backing from the biggest names in tech to build data centers across the United States. And on the other, a scrappy Chinese startup that's released an impressive open source model trained on a shoestring budget. In which case, what sense would it make for a company like Reliance, for example, to invest $20 to $30 billion, these are Bloomberg estimates, in a data center in a far corner of the country on the west coast of Gujarat with capacities 3 times that of all India? Well, these questions are yet to be posed because I'm quite sure it'll take a day or two for the global shockwaves from this to subside. Meanwhile, there will be questions on how much compute capacity is really required, at what cost, and if the Chinese can come up with this killer price model, could others? Obviously, today, we don't know. Meta CEO Mark Zuckerberg said last week they would invest between $60 to $65 billion in capital expenditure on AI in 2025. He also said he expects Meta AI to be the leading assistant serving more than 1 billion people this year, and that Meta's Llama 4 model is expected to become the leading state-of-the-art model this year, and it wants to build or plans to build an AI engineer that can contribute more code to its research and development efforts. So what happens now? Well, every tech CEO knows in his or her heart and mind that technology changes can come out of nowhere and overturn business models. COVID kicked off a wave of investment in people and infrastructure at a pace not seen for a long time in Silicon Valley. It appeared that our lives were becoming rapidly digital and would stay that way. A year later, most or all of these major tech firms, including Meta, Google, and Amazon, were downsizing furiously, laying off tens of thousands of people. And then AI happened and stock prices shot up again, and once again the value was in full control. The tech bros worked on securing and cementing their future and also indulged in some world opinion domination by standing alongside Donald Trump, who's been only too glad to welcome them. And then comes DeepSeek. If Trump and team thought, even for a moment, that the China trade war would largely be about cheap imports of apparel, toys, furniture, and leather, this would obviously be a big shock. China is now demonstrating that it can do a lot more cheaply. Even if people argue that the value of this effort is more than $6 million, it's still a knockout punch that comes from just about nowhere. Thomas Friedman, the New York Times columnist, wrote in mid-December, Donald Trump's relentless China bashing and tariffs during his first term as president lit a fire under Beijing to double down on its efforts to gain global supremacy in electric cars, robots, and rare materials, and to become as independent of America's markets and tools as possible. Jim McGregor, a business consultant who's lived in China for 30 years, told Friedman that China had its Sputnik moment, and that Sputnik moment's name was Donald Trump. He woke them up to the fact that they needed an all-hands-on-deck effort to take their indigenous, scientific, innovative, and advanced manufacturing skills to a new level. Bizarrely, Silicon Valley venture capitalist and Donald Trump advisor Mark Andreessen on Monday described DeepSeek, that's R1, DeepSeek R1, as AI's Sputnik moment. So Sputnik, in case you were wondering, was the first artificial Earth satellite that was launched by the Soviet Union in 1957, which set off the US space race that led to the first man on the moon in 1969. So where will DeepSeek land and how firmly? Well, we don't know yet. But for now, it does look like Trump and his good friends will have to descend to Earth from their lofty heights. And that brings us to the top stories and themes of the day. The markets crashed 800 points on continued earnings weakness. Oil prices fall on a fresh Trump call to the OPEC to cut them. Understanding DeepSeek, where did it suddenly come from? And India Inc. wants a friendlier corporate tax regime.
This is a core report with Govindraj Ethiraj.
The markets hit a 7-month low. The Nifty 50 has hit a 7-month low, and along with the Sensex is set for its fourth straight month of losses in January, which would be the longest monthly losing streak in more than 23 years. Monday was another tough day with the bears fully in control as foreign institutional investor selling that is in the vicinity of $8 billion now is continuing on a host of factors that are now quite well evident and showcased, ranging from weak earnings to a weak rupee. Sudden surprises like news of a Chinese low-cost AI model, which has rattled all the tech majors globally, also affects India, at least in sentiment. The Sensex was down 824 points to 75,366, and the Nifty 50 was down 263 points at 22,829. Both indices were down a little over 1%, but the mid and small cap stock indices took much bigger hits, with the BSE mid cap falling about 2.7% and the small cap falling more than 3.5%. The total market capitalization for BSE listed firms dropped to about 410 lakh crore rupees from 419 lakh crore rupees in the previous session, making investors lose about 10 lakh crores in a single day, according to Mint. The DeepSeek stock rout on Wall Street. Stocks were down sharply on Monday on concerns about the artificial intelligence stock bubble popping because of the emergence of Chinese startup DeepSeek, which has possibly made a competitive AI model for a fraction of the cost, according to CNBC. The Dow Jones Industrial Average had dropped about 122 points, the Nasdaq Composite 2.7%, and the S&P 500 was down 1.6% into morning trade on Monday on Wall Street. NVIDIA and other US technology firm stocks plunged on Monday, with NVIDIA, the chip designer, which has also been a major beneficiary of the AI hype, falling more than 13%. And with that, according to CNBC, the mega cap tech stock was on track to notch its worst day since March 2020. NVIDIA's losses also drove other AI trades and the broader US market lower. Micron and ARM holdings were down 8 and 9%. Chipmakers Broadcom and Advanced Micro Devices lost about 14% and 5%. Actually, almost all tech stocks were down. Interestingly, and perhaps not so interestingly, power companies who were supposed to benefit from all that energy the data centers would potentially need were also getting hammered. Constellation Energy and Vistra, two of the best-known derivative plays tied to the power build-out for AI, fell more than 12 and 19%, said CNBC. And international markets, Netherlands-based chip companies ASML and ASM International were also down. In Asia, Japanese chip-related stocks were down. DeepSeek had launched, as we said, a free open-source large language model in late December, and it claimed it was developed in just 2 months at a cost of under $6 million. And that's something that many people are already contesting, but that doesn't change the outcome. And last week, DeepSeek released a reasoning model that also apparently outperformed OpenAI's latest in many third-party tests. You can also download DeepSeek in India and start using it like I did yesterday, but it's a little tough to get to because obviously the crowds are building up. Oil prices fall on OPEC call. And here's our India Energy Week segment. Oil prices fell on Monday after US President Trump called on the Organization of Petroleum Exporting Countries to reduce prices after the announcement of wide-ranging measures to boost US oil and gas output in his first week in office. Brent crude futures were down slightly to about $78.15 or just around $78 after settling higher on Friday or over the weekend. Oil is also recovered from sharper losses seen earlier in the session after the US reversed plans to impose sanctions and tariffs on Colombia after it agreed to accept deported migrants from the United States, according to a White House statement late Sunday, as per Reuters. Sanctions could have disrupted oil supply as Colombia last year sent some 41% of its seaborne crude exports to the United States, according to data firm analytics Kepler, quoted by Reuters. Meanwhile, Reuters also said that Saudi Arabia may raise crude prices for Asian buyers in March to their highest in more than a year after benchmark prices spiked on higher demand from China and India. as sanctions disrupted Russian supply. The March official selling price for flagship Arab light crude may jump by about $2 to $2.5 a barrel from February, according to 4 Asian refining sources in that Reuters survey. This segment was supported by the India Energy Week 2025, scheduled from February 11th to 14th in New Delhi, and you can register for the same using the link in the show notes. How deep is DeepSeek? Chinese AI company DeepSeek has Silicon Valley marveling at how its programmers nearly matched American rivals despite using inferior chips, the Wall Street Journal reported on Monday. AI models from DeepSeek, the Chinese company, have zoomed to the global top 10 in performance according to popular ranking. I've used it myself and I'm not able to give a official or a professional view, but it's pretty interesting, and it's also a little difficult to get into because I guess of the huge rush to sign up. On Jan 20th, DeepSeek introduced R1, a specialized model designed for complex problem solving. DeepSeek's advances sparked a sell-off led by chip shares early on Monday on concerns that the huge spending by these big tech giants on leading-edge semiconductor and other AI infrastructure was justified. So the concerns were whether this spending was justified. So what does DeepSeek mean, and how does such an option even emerge? I spoke with Jaspreet Bindra, founder and managing director of Tech Whisperer, a consultant in digital transformation and AI, and earlier group chief digital officer with the Mahindra Group. I began by asking him how much of a surprise DeepSeek was.
I think it definitely has been a surprise for everyone, though now a few experts and pundits are claiming that they did see it earlier and did talk about it. I think the fact that China is not too far away from the US was not a surprise. But the fact that they were like this far ahead and looking at costs which were less than 3% of the costs that the Valley companies are building models at was a super big surprise. And I think you'll see the effect of it when the markets open in a few hours' time.
Got it. And in a general sense, why is it or how is it, to the extent that a layperson could understand, that the costs are so dramatically different in the way the Silicon Valley has done it or scoped it versus how this particular Chinese company has done it?
I think in many ways, the US's efforts to keep China a distant second in the race by the whole chips ban, the semiconductors ban, etc., has come back to bite it. What happened was that while the US companies were working with tens of billions of dollars available, the Chinese companies were starved of resources, starved of chips, starved of compute power. And as we all know, and we know this well in India, that necessity is the mother of invention. And so, I think they just approached this entirely fresh, built upon some of the stuff that already had come out in the Valley. So, for example, DeepSeek, and specifically in this case, is not trained on the raw data of the internet, which is what, ChatGPT or Gemini, etc. were trained on, and therefore required this huge computing power, billions of dollars, many, many months to get the models right. These guys used a new technique which people are discovering called distillation, which basically takes ChatGPT and the results that gives and builds on top of that. So much like in many other technologies, you're building on top of stuff which has already been done. And I think this is part of the secret sauce. I'm sure there are others which we still don't know about. The fact that they've been able to juice out more power from cheaper last generation chips, the fact that they've used young, very bright, but very hungry engineers to make this happen are all parts of the mix. I'm sure there's other stuff too.
Right. And, so people are saying that the entire chain of AI investments is now looking questionable, which includes obviously the hardware side of it. So how does that play out? Because, even in India, we're talking about these giant data centers where we want to spend billions of dollars, which we would have typically spent on those very chips to do the same kind of computing that we think will be done.
It's an interesting question, and it can play out both ways, frankly, Govind, because now, if you think of the two main kind of companies or three main kind of companies, they're the big techs like Microsoft, Google, etc. Now, while they've committed to invest $80 billion, $60 billion, etc., if they discover a way where they can have AI much more cheaply to deliver to their customers, they'll be net gainers. They're not as much in the AI game as they are in delivering AI-infused services to their end customers. So in the medium to long term, this could actually be a gain for them. Number two is obviously the infrastructure guys like NVIDIA. Okay, and there it gets more interesting. I think NVIDIA will fall the hardest immediately. But again, if instead of 5 people building AI and spending $50 billion with it, with buying those chips, if suddenly because of this AI model production gets democratized and 100,000 people can build small models, they will still need GPUs, semiconductors, chips from companies like NVIDIA. And so you could look at a scenario where there are more customers, less chips per customer. What, however, is interesting to conclude is the third constituency, which are, these big startups now like OpenAI, which have been spending so much money to build these chips. They clearly will have to go in a different direction. And I think at OpenAI, they must be having these war rooms right now. I know Meta has. There are 4 war rooms which have been formed at Meta right now, to figure out what is the direction that they go in.
All of this seems so far away from how things were looking just a week ago. But let me come to the other question which has been raised. This is open source. And I'd like to use this to ask you 2 questions. I mean, what open source in general, and what does open source in this context mean versus, let's say, OpenAI, the proper noun, and open source in, I guess, the common noun.
There have been many surprises about DeepSeek. The cost obviously is one surprise. The kind of chips used is another surprise. The fact that China came out and did it is a third surprise. Okay, and I think the fourth big surprise is that this was all open sourced, and the company has published a technical paper on it, which is a full disclosure paper. The kind of papers that almost no Western company has published. So it's a full disclosure. They kind of give out the tech specs. They tell exactly what the weights in the model are so that anyone can take it and, build on it. In a sense, it's a Trojan horse approach because obviously all developers would want to build on, the cheapest model, and this is by far the cheapest. And so, this model will become the basis of all AI rather than an OpenAI model becoming the basis of all AI. And so I think the open source part is important, one, for this reason. And the second is that in technology, it's always a closed source, open source battle. And we know that played out in IT, with Microsoft and the whole Wintel and then the open source Unix and others. And then, even in the Apple iOS versus the Android kind of ecosystems. And I think the same thing will play out now in the closed source versus open source. And at least history tells us that both continue to coexist. The open source has certain benefits and closed source has certain other benefits. But if I may conclude by saying that I think what has happened is that usually open source takes much longer to catch up. Okay, in this case, especially with DeepSeek, even Meta's Llama open source models, they were like semi-open source, were still reasonably behind in GPT class models like ChatGPT or Gemini. But this has narrowed the gap considerably very fast at super low cost, and so has caught up much faster.
Got it. And last question. So does India benefit? Can India benefit? How should we be looking at this development?
Well, my argument and hope is that while this is an existentialist threat for many countries in the West, Indians should be elated by this development, despite our antipathy towards China. I mean, if you follow this sector, there's always been this debate between whether India should make its own large language models or not, and everyone has weighed in. And the main barriers to building India-specific, India context, India language, large language models has really been the cost. It's been the compute cost, the cost of talent, the cost of data, etc. And now suddenly that is a myth. That shibboleth has been broken. And so I think it gives an opportunity for India to build its own, not one, but multiple large language models. And secondly, it's great for startups and developers. If they were paying, what they were paying an OpenAI or equivalent for their APIs, now they can potentially get it for, cents to the dollar, and therefore create much cheaper products, have lower costs. So I think for both these reasons, it's good for India if we grasp the opportunity.
Good note to end on. Jaspreet, thank you so much for joining me.
Great. Good to be here. Thank you.
Corporate tax wishlist. Corporate tax collections have been strong in the last few years, and perhaps this is a good time to examine what's working and not when it comes to taxation, both administratively and otherwise. There are some clear expectations, for instance, for lower tax on new manufacturing units, as we've discussed here, and some clamor for lower corporate tax rates overall. But the larger focus appears to be administrative, and to do with really making it simpler for companies to deal with the tax department and thus invest more. I reached out to Ian Dwarak, partner of Price Waterhouse and Company LLP, and began by asking him how the last year was in tax collections and trends and what he was looking out for from the union budget to be showcased or presented later this week.
Anyone would tell you that the broad tax trends have been extremely positive, not only in the last year, but in the last few years. There has been a fair amount of buoyancy in tax collections. Growth has been robust, and that's obviously also backed by the fact that economically we've been doing extremely well. Our GDP has grown, and that is obviously reflected within our tax collections. The overall share of corporate taxes has also been growing, which is a positive thing. On its part, I think the government has been, of course, increasing the amount of scrutiny on taxpayers and corporate taxpayers. Nothing wrong with that. With increased growth comes the responsibility to pay additional taxes. There has been a greater focus with regard to things like assessments, like high-pitched assessments, a lot of transfer pricing appeals and assessments which have come up, a lot of litigation on foreign companies on aspects such as permanent establishments, and of course, some invasive procedures such as search and survey proceedings, which continue. So I think overall, extremely buoyant collections on the back of a strong economic growth and good performance by Indian companies.
Dwarak, any trends within that in the terms of what's been more secular and what could have been more, let's say, in the nature of bumps?
If you look at it industry-wise, I think there's been a spurt in manufacturing, again, which is to be expected. There's a lot more to go still, but there has been a spurt in manufacturing and therefore the kind of assessments which have been taking place for manufacturing companies. There have been continued questions with regard to amounts which are leaving the country. So payments made by a lot of manufacturing companies, such as for management fees, for royalties, anything that goes to reduce their profits, anything which is paid outside the country are being questioned a lot more. And that's also only natural because I think the government's thinking is, hey guys, if you've been manufacturing in India for a period of time, that we would expect you to be more self-sufficient and we would expect these kind of payments to reduce over time. So I think there has been a significant spike in the kind of assessments which have been carried out for those kind of companies. There's been a huge spike in terms of international tax. So the number of foreign companies which have been receiving tax notices, the kind of issues which have been coming up specifically with regard to things like permanent establishment have been immense. A lot of adjustments being made on that count. Finally, on the not so good side, I think the move to faceless assessments has not been without some challenges. I think the amount of information which is being sought by the government is immense. It's extremely voluminous. So I think if they're able to taper that down to be more specific in terms of the asks of companies, it'll just ensure that A, companies don't waste their time providing a whole lot of irrelevant information, and B, the government also targets its focus to something which is relevant and which perhaps can generate greater revenue for them.
You've raised about 3 or 4, I think, broadly the administrative approach issues when it comes to tax collections. Is there anything specific that is on top of the mind, either a clause, something that's old or new? We also have a new direct tax code imminent. How much of it will actually emerge in a week's time, we don't know. But anything there?
Yeah, you took the words out of my mouth. So I think there is, of course, the hope that there will be a new direct tax law, which will come in. At least that's what the finance minister announced 6 months back. But since that point in time, I think there have been around 22 subcommittees that the government has formed to look into the simplification of the tax law and come out with new provisions. They put it out, they requested for public consultation in the beginning of October, and I believe more than 6,500 suggestions have been received. We still do not know if they're going to come out with a new tax law altogether as part of this budget, or whether they're just going to tinker with the existing law as it is and then propose a new finance bill before the budget session closes. So I'm betting on the second at this point in time, maybe a little bit of tinkering this point just in the budget, but thereafter a new finance bill hopefully comes out maybe before Parliament closes or the budget session. In terms of provisions itself, I think 3 or 4 asks, right? One, just simplify the language. It is extremely, extremely complicated. So just simplify it. Second, remove provisions which are redundant. And this law was written in 1961. The world has changed. Businesses have changed. Business models have changed. Remove stuff which is not relevant anymore.
What's an example of that?
I think a lot of the provisions with regard to taxation of specific kinds of companies is something which is just redundant. I mean, if you look at the provisions which were introduced for taxation of royalties over a period of time, I mean, those kind of provisions don't exist anymore. So make it more current to what is happening in the world today, which would be my third ask, right? Bring in legislation which is relevant to the kind of businesses and the business models that exist today. For example, if you say that you want to invest, or the government wants to invest heavily in infrastructure, that will necessarily require, and historically we've seen it, a large presence of foreign personnel in India for a substantial period of time. Now that creates something called a permanent establishment. So can the government come up with some sort of provisions that ease the presence of foreign technicians in India over a substantial period of time? Will we come up with some suggestions with regulations for Pillar 2, which the whole world has been talking about? And today that one is tricky thanks to Donald Trump. And I think the US Secretary of Treasury, or his pick for Treasury, has gone out on a limb and he said any country that introduces Pillar 2 regulations better watch out. So again, is India going to bow to that pressure, or are we going to go ahead and say, no, this is a commitment and we're going to go ahead and do it? The taxation of online companies and a lot of online businesses, things like the significant economic presence, which was introduced 3 or 4 years back, need simplification, they need clarifications. So I think making the tax law more relevant to the kind of industries space and a sector which has immense potential for the country we want to invest in. Are we going to come up with something for that? Are we going to do something on green energy? 2070 is the target we've given ourselves to be carbon neutral. But to get there has to be substantial incentivization of businesses to go carbon neutral over the next 5 to 7 years. Of course, taper it off. Nobody is saying you need to continue with tax breaks forever, but this is the time to do it. So I think these are some of the things, Govind, that I think the government should be looking at.
Right, Dwarak, thank you so much for joining me and speaking with me.
Thanks, Govind. Pleasure as always.
That was the Core Report with me, Govindraj Ethiraj. Do stay connected with more of our coverage at the Core. You can check out our website or sign up to our newsletter for our exclusive stories, one in-depth feature a day on www.thecore.in. Do also track us on LinkedIn, where we usually post synopses or extracts of our top stories and interviews. We would love your feedback on how we can make business more interesting and relevant, including, of course, India's vibrant manufacturing sector. So write to us at feedback@thecore.in. And thank you once again for listening.